Welcome back to the channel. I believe robotics is the next explosive industry and early investors will be able to change their financial life by picking the right stocks. Today I will share with you my top robotics pick, the reasoning why, growth, potential, optionality, return on investment and everything you need to know. Today we are talking about one of the largest opportunity in 2026, which I believe is Ouster stock. From the company presentation, Ouster positions itself as the company brings physical AI to life inside industrial, robotics, automotive, and smart infrastructure. This is the short segment from company CEO what company is doing and why it's positioned to win in the future.
Ouster is providing the eyes of autonomy. Jensen Huang said it best. Everything that is moving is becoming robotic, and Ouster is providing the eyes of those robotic systems. So obviously there is a huge amount of activity in physical AI. No matter where you look, there are things becoming autonomous, robotic, and intelligent. And Ouster is providing the core sensing and perception solutions that power that world. So whether it's in robotics, automotive, or industrial, we have a solution for those customers.
Now, after we understand what Ouster is doing, let me explain why did I even start researching Ouster stock. So firstly, I have different watch lists for different themes in the market. Software as a service, semiconductors, Max 7, fintech, robotics, cybersecurity, and so on. And in this list for robotics, I have different companies and visualized market cap, margins, rule of 40, expectations for the earnings, earnings per share, valuation, PEG. Also, I have visualized the revenue acceleration. For example, this means revenue is decelerating for 3 consecutive quarters, and this means revenue is reaccelerating and stuff. Also, I visualize the revenue growth and revenue growth forward and forward +1, which means for the next 3 years and so on and so forth. So here you can see I have Ouster stock. And if you want to find the really multi-bagger stocks, you need to find a company, a really small company with relatively small market cap. And then this company should be able to use operating leverage to improve the profitability. And also this company should be able to have a relatively cheap multiple so that when the multiple will be re-rated, for example, from price to sales of 2 to price to sales of 8, this is already 4x. And then if revenue also doubles, this is already 8x. So this is the recipe for multi-baggers. You need to have small market cap, you need to have a multiple expansion opportunity, and you need to have operating leverage. So that's exactly what I was looking here. You can see for the revenue, current revenue year over year, Ouster has the largest revenue growth in the latest quarter. In the latest financial year, they grew 52.5%. And for the next year, they expected to grow 59%, which I believe is a relatively conservative guidance, which will be beat, and they will also grow 50+%. And for the third year in the future, they expect to grow 35%, which I believe this is very, very conservative guidance. As we will see, the guidance from the management, the guidance for the revenue grows from 30% to 50%. So I believe 35% is really conservative. Considering that we are in the beginning of robotics revolution. So now we understand we have high revenue growth compared to other companies. You see the fastest growth also have Symbotic, here Umbrella, but Umbrella grew very fast in a recent year, but the projected growth is just 13% in average here. And for Intuitive Surgical, they grew 20% in the latest financial year, but expected significant deceleration to 17% and 13% here. So Ouster is obviously the leader here in this robotics list. Of course, not all the robotics companies in here. So if I miss some high quality company, please let me know in the comments below the ticker symbol, and I will definitely take time to research that company as well. Now we are looking for the operating leverage, and Ouster is not profitable whatsoever. Net margin minus 30%, operating margin minus 37%, free cash flow margin minus 37%. So from the perspective of profitability, Ouster need to do a lot of job to improve the profitability. And from the perspective of multiple expansion, I also believe that the picture for the Ouster is not the best here, with price to sales of 14.4 for Ouster, which is higher than for any other companies in this list, even compared to Intuitive Surgical, which has a rule of 40 of 52 and which has huge operating margin, free cash flow margin more than 25%. This is a very solid company, continue growing. profitable company. So Ouster, from the perspective of price to sales, is more expensive than Intuitive Surgical. Of course, Ouster is growing faster, but Ouster did not really prove the business model, did not really prove what Intuitive Surgical already proved. So from the perspective of valuation, maybe it will correct a little bit more, but the opportunity for the growth and competition, which we will talk later in the video, is very significant for Ouster. Now, as I mentioned, the revenue growth for Ouster is really, really nice. The revenue grew from 2018 from basically 1 million to now 170 million. The revenue growth is outstanding for the Ouster. The net income is still deeply unprofitable. Free cash flow is still deeply unprofitable, but the margins are improving. For example, for the gross margin, you can see from deep in a red gross margin, now it's improved, keep improving to 50%, and operating margin is also trying to break even close to zero compared to very red operating margins. Wall Street analysts currently expecting Ouster to break even in 2028. I believe this will happen a little bit earlier in 2027. So this estimation is a little bit conservative. I believe Ouster can hit first profitable quarters in financial year 2027, and then continue to improve the profitability using operating leverage. And from the revenue growth perspective, you can see the revenue growth from analysts is relatively conservative, because the company was guiding for 30 to 50% growth, which is 40% in average. And here currently we do not really see 40% in average for the next 5 years from the analyst in Wall Street. Now, in terms of the competition, of course, the bear case for Ouster is that competition is too high. This is the hardware, nobody can make money in the hardware, the margins are so low, and also Chinese competition is coming, and Chinese competitors will set the bottom low prices, and there is no way Ouster can make money in this kind of scenario. So here is competitors of Ouster, and we can see Hesai, which is a Chinese competitor. They also focusing on automotive, robotics, and industrial lidars. But I don't really believe in Chinese bear case, because as you can see, in July 7, 2026, Hesai Technology, Shanghai-based lidar maker, faced renewed scrutiny over cybersecurity risks tied to its lidar sensors. So for the Western world to use Chinese lidars, it will not be really possible with current geopolitical situation. So I believe that Ouster will be leader in the Western world for those lidars. Of course, some private companies and some smaller public companies will be also making competition for Ouster, but I believe this will be leader in the Western world. Meanwhile, Chinese competitors can be participating in Asia market, and they can sell to other parts of the world, potentially Europe. But still, I believe Chinese bear case is overstated, and because of the cybersecurity concerns, Chinese lidars will not be used as it expected by the Wall Street, who is setting those low price targets for Ouster. And here is the evidence from the official Ouster account that new Rev 8 OS lidar is now compliant with Build America, Buy America. Now, state and local transportation agency can deploy and trust Rev 8 and Ouster Blue City in federal funded infrastructure project in ITC, smart cities, transit, and tooling. This is very bullish. Ouster is absolutely leader in America and the Western world. But of course, there is a bear case. The bear case is that company is not profitable and company keeps diluting shareholders. Here you can see shares outstanding keep growing. From in 2018 we have 1 million shares, and now we have 61 million shares. So this is absolutely mind-blowing dilution for the shareholders. And here I just visualize the shares outstanding growth, and even though the line seems like in the bottom of the chart, but still this is significant dilution of 18% in the latest quarter. So we are, as early investors, are expecting that once company hit profitability, the dilution will slow down. Of course, Ouster will not start buying back shares immediately after becoming profitable, but at least we can expect that dilution will slow down after reaching the profitability. In the last 4 months, from April to July, the shares of the company skyrocketed almost 300%. And the management of the company used this opportunity to issue new shares. They did a 200 million public stock offering. They issued 3.62 million shares with the price of 55 $22 per share. Of course, after this announcement, the share price just absolutely collapsed 32% and now trading closer to $33 per share. But this is very bullish fundamentally for the company because they had before $208 million in cash and short-term investments, and now they have another 200, which means now they have 400 million in cash and short-term investments, which is very amazing for them to do acquisitions to fund their growth, which is amazing to compensate their workers, to motivate the employees and stuff, or just invest in marketing and build more collaboration with other enterprises. And here is another reason why I believe this decision from management was absolutely brilliant to dilute shareholders, is because currently the valuation, they basically diluted shareholder at price to sales 21. And if you see from 2022, the price to sales of 21 was absolute record. So of course this valuation is a little bit exuberant. The management understand that price to sales north of 20 is absolutely ridiculous for the company. In the end of the day, currently Ouster mostly is hardware company. Even part of the revenue is coming from software solutions. It's still mostly hardware company, and also the growth is good, but the growth is not like 200%, 300%. So 20 price to sales is a little bit exuberant for Ouster. The management just used this opportunity to dilute shareholders and issue more shares and raise capital for future acquisitions and growth. Now price to sales corrected to 15. If you ask me, do I think is it good to buy Ouster right now? I believe there is better technical levels to buy Ouster. We will see in the technical segment of the show where I would buy more of Ouster. Currently, I already have a position and my average is in low 30s, and where I would look for averaging up my position. Now, in terms of the return on investment, if we invest into Ouster shares, basically today, I have a base case of 191% in the next 5 years. I have a bull case of 240%, and I have bear case of minus 42%. For base case, let me share with you the numbers. So here I project 45% revenue growth. I project net income margin of 7%, and I project PE of 100. I believe when company is growing 45% on the top line, the 100 PE is relatively reasonable for the company. In this case, we can get almost triple if we invest in Ouster today. But again, in technical segment of the show, I will show you where I believe is the better opportunity to buy more shares. Ouster is very technical stock and it's really respecting technicals. So in the technical segments of the show, we'll discuss the better price opportunity to buy into Ouster. On the bull case, we have 244%, and here we project basically the most bullish scenario from the management of 50% until 2030. We expect a net income margin. Actually, for the bull case, I think net income margin we can project around 9%, and for the PE, let's keep it at 100. In this case, we can actually expect more than 244. It's even 330. So this is actually even more upside. And on the bear case scenario, we have basically 35% growth, net income margin of 5%, and PE of 40. Even though we are growing 35%, but in a worst case scenario where management cannot really execute their promises, I believe you can lose half of your money if you invest in Ouster. So listen, Ouster is not some kind of a stable company like Microsoft or Amazon or Apple, where you can just put your money and where you can just wait for 10 years and just become rich. No, Ouster is what we so-called moonshot, where you are doing research, where you are following every earnings report, where you are tracking how they are collaborating with governments, enterprises, how they are participating in robotics revolution, and checking after every earnings report if the theses are intact. And now coming to the technical segment of the show. So basically what happened here, let me just first explain. I am not trader, I'm not trading patterns, but I know patterns. So what happened here is basically like this. Here you can see we have a cup and handle. Okay, so this is this is your cup and this is your handle. How cup and handle works is basically you take this body of the cup and you just double this. And you just double this, and where is the target for cup and handle? This is exactly where shares being rejected. So the conclusion of this is that we need to sell Ouster and never come back. No, this is not what I'm trying to say here. What I'm trying to say is that traders just use the technical pattern to drive the share price up. But long-term investors usually are not buying at here because long-term investors knew that close to $60 per share, the price to sales was close to 20, which is absolutely ridiculously exuberant for Ouster. Let's enable the logarithmic scale and see what we can expect next. So here obviously we have an uptrend, and after the price just hitting the top hitting the top resistance of the channel is starting correcting. So what I would expect next, I would expect continuously correction. We are coming to the bottom of the channel, and then after the consolidation we just finally will go up basically closer to the end of the year, depending on, of course, the earnings report, depending on the competition, depending on the announcement, and so on and so forth. What I really love about Ouster is that they are very active in Twitter, always announcements, always activity. They are always communicating to the shareholders what they are doing, when they are doing, how this is affecting the company, and so on and so forth. I really like that. So I believe that currently at $43 per share, this is not a generational buying opportunity for Ouster, but I believe Ouster is a really solid company. This is my top pick for robotics market. Before I had my Amazon as the top robotics play, but based on this AI infrastructure revolution, what I understand is that Amazon will absolutely benefit from robotics. But before Amazon benefit from robotics, the picks and shovels for robotics market will take advantage of that, and picks and shovels is exactly Ouster. So where I would buy more Ouster is closer to $35 per share in the bottom of this uptrending channel. If you have other robotics opportunities which are not in my list, please make sure to drop the tickers in the comments below. I will have a look because I am really interested in this industry. I really believe that this is the next explosive industry, even bigger, probably even bigger than AI infrastructure build out. I believe that robotics is the next. Probably we are a little bit early and there could be some consolidation needed for those robotics companies, but I believe it's coming. I see it's coming. The physical AI is the next explosive industry, and Jason Wong already communicated this to the world during multiple of his presentations. Thank you so much for watching. I appreciate your time, and I will see you in the next one.